Tired of watching your investments go nowhere? Want to unlock the investing secrets of world's greatest investors? Then you're in the right place. Today, we're revealing the top 10 secrets used by the world's most successful investors. Strategies that have turned millions into billions. Warning: these aren't get-rich-quick schemes. They're proven, time-tested methods that anyone can learn and apply to get rich. So are you ready? Let's dive in. The first secret is counterintuitive. Buy low, sell high. It sounds simple, but most investors do the opposite, buying high during market euphoria and selling low during panic. Think of Warren Buffett, who famously bought heavily during the 2008 financial crisis, capitalizing on widespread fear. He understood that market downturns create opportunities to acquire undervalued assets. Don't follow the herd. Develop your own analysis and act when others are panicking. Successful investors don't chase hype or trends. They focus on value. They meticulously analyze a company's fundamentals, revenue, earnings, cash flow, debt levels, to determine its intrinsic worth. This allows them to ignore short-term market noise and identify companies trading below their true value. Think of Benjamin Graham, the father of value investing, who famously sought companies trading at a significant discount to their net asset value. Volatility is normal market fluctuation. Risk is the chance of permanent capital loss. Successful investors differentiate between the two. They see volatility as an opportunity to buy low, while carefully managing risk by diversifying their portfolio and setting stop-loss orders. The dot-com bubble burst in 2000 is a prime example of high volatility, leading to significant losses for those who didn't understand the underlying risks. If this is making you wiser with money, hit subscribe and join the Money Wisdom movement. Let's move to the fourth investing secret of super investors. Before you buy, know when you'll sell. Define your profit targets and stop-loss levels. This prevents emotional decision-making during market swings. Legendary investor George Soros famously used stop-loss orders to limit his potential losses, even on highly successful trades. Having a clear exit strategy helps you lock in profits and protect your capital. Diversification is crucial, but don't spread your investments too thin. Focus on a few high-quality, well-researched opportunities across different sectors. Over-diversification dilutes returns. As Warren Buffett says, wide diversification is only required when investors do not understand what they are doing. You can consider the approach of legendary investor Peter Lynch, who focused on companies he understood, often within his own sphere of experience. Market fluctuations are inevitable. Don't panic sell during downturns. Use them to your advantage. Successful investors see volatility as an opportunity to buy low. The 1987 Black Monday crash, while initially terrifying, presented a buying opportunity for those with a long-term perspective. Everyone makes mistakes. The key is to learn from them and avoid repeating them. Study the successes and failures of other investors, besides your own. Even Warren Buffett has admitted to making mistakes, emphasizing the importance of continuous learning and adaptation. Understand the risks involved in each investment. Don't chase trends. Focus on investments you understand and align with your risk profile. A young investor with a long-time horizon can tolerate more risk than someone nearing retirement. Opportunities don't last forever. Be prepared to act quickly when you find a great deal. Don't hesitate. Seize the moment. Many successful investors have emphasized the importance of decisive action, recognizing that investing opportunities can disappear quickly. Warren Buffett is known for his ability to identify undervalued assets and act swiftly, capitalizing on opportunities before others recognize them. Successful investing is a marathon, not a sprint. Have a long-term perspective and don't get swayed by short-term market fluctuations. Focus on compounding returns over time. The power of compounding is a key driver of long-term wealth creation. Warren Buffett's career is the quintessential example. He consistently holds investments for years, even decades, allowing the power of compounding to generate substantial returns. Let's quickly recap the 10 qualities of super investors discussed so far. First, successful investors buy assets when others are panicking and sell when others are euphoric, capitalizing on market sentiment. Second, they utilize a robust methodology to determine a company's intrinsic value, independent of market price, focusing on factors like revenue, cash flow, and earnings. Third, successful investors differentiate between market volatility, that is price fluctuations, and true risk, that is permanent capital loss, avoiding investments with high inherent risk. Fourth, before making an investment, they define clear profit targets and loss limits, ensuring disciplined entry and exit points. Fifth, they maintain a well-diversified portfolio, avoiding both under and over diversification, concentrating on a select number of high-quality investments. Sixth, they view market volatility not as a threat, but as an opportunity to acquire undervalued assets, remaining unfazed by short-term fluctuations. Seventh, they continuously learn from their own investing errors and those of others, adapting their strategies to avoid repeating past mistakes. 8. They focus on investments that align to their risk profile. 9th, they seize investment opportunities swiftly and decisively, recognizing that favorable conditions may not persist forever. And last, they have a long-term perspective to investing and focus on the power of compounding for wealth creation. So there you have it, the top 10 secrets of super investors. Remember, successful investing requires discipline, patience, and a long-term perspective. By mastering these strategies, you can significantly improve your chances of outsmarting the market and building lasting wealth. Don't forget to like, subscribe, and share this video with anyone who wants to take control of their financial future. And do let us know in comments what topics you want us to cover in future videos. See you in the next Money Wisdom video.